As inflation cools, the prospects of Social Security benefits rising as drastically as they did in 2023 are increasing. According to predictions from the Senior Citizens League, a nonpartisan advocacy group, retirees could have a cost of living adjustment in the 3% area, less than half of the COLA rise they enjoyed in 2023. The group examines inflation statistics to estimate potential COLA changes in the future. Another estimate is due on September 13th and might be higher or lower, depending on new August inflation data. In mid-October, the exact proportion for the inflation adjustment will be revealed. This year's COLA amounted to an 8.7% increase for both Social Security and Supplemental Security Income benefits, the largest increase since 1981, when the inflation adjustment was 11.2%. The cost of living increase due in 2022 was also solid at 5.9%. No one should make any assumptions about how much their Social Security benefits will grow next year. Nonetheless, other analysts believe that an increase in the range of 2.7% to 3.2% is still a strong probability. "We are returning to reality," said Mary Johnson, a policy analyst with the Senior Citizens League who supervises estimates for Social Security inflation adjustments. However, she points out, the 3% is still above average. Johnson stated that the average inflation adjustment for Social Security payouts over the last 2 decades was 2.6%. In 2010, 2011, and 2016, there was no adjustment at all or at 0% for inflation. Before the COVID-19 outbreak, supply networks broke, and federal stimulus monies flooded the market. Inflation adjustments were minor. The inflation adjustment for Social Security benefits in 2020 was 1.6%. It was followed by a 1.3% payment increase in 2021. Even yet, when compared to last year's 8.7% increase, a projected 3% increase will feel like drowning for many seniors on fixed incomes, according to Johnson. A precise formula outlined in the Social Security Act will be utilized to calculate the upcoming inflation adjustment based on monthly adjustments for the Consumer Price Index for urban wage earners and clerical workers for July, August, and September. The Bureau of Labor Statistics will publish August inflation data at 8:30 a.m., September 13th. The September data will be available on October 12th. The most current data indicated a 3.2% increase in the Consumer Price Index in July over the previous year. The Consumer Price Index for urban wage earners and clerical workers, or CPIW, rose 2.6% in the year to July. In order to determine Social Security adjustments, CPIW inflation numbers for July, August, and September are added together and averaged. As inflation continues, this year's third-quarter average will be compared to last year's third-quarter average. According to the Senior Citizens League, the percentage difference between the two is the amount of the COLA, which would be due for the check received in January 2024. If the COLA is set at 3%, as the advocacy organization now anticipates, the average monthly Social Security retirement payment will increase by around $55 per month. According to the Social Security Administration, the average monthly payment for all retired workers was $1,827 in January after the COLA increase this year. Add the extra $55 over a year, and some people could be looking at an extra $660. Based on an average benefit of roughly $1,681 per month for all retired workers in 2023, the COLA adjustment adds up to an extra $146 per month. That kind of COLA adjustment came up to an extra $1,752 over the course of a year. According to Social Security data, around 71 million people received Social Security and/or Supplemental Security Income payments in June. Some analysts believe that inflation will not fall in a straight line in the future. However, after 11 interest rate hikes by the Federal Reserve since March 2022, inflation is expected to continue to decline. If we see strong wage growth, inflation may rise and rebound, contributing to higher costs for some goods in the long run. According to Omer Sharif, founder and president of Inflation Insights in Pasadena, California, the year-over-year Consumer Price Index may grow 3.6% to 3.7% in August and 3.5% to 3.6% in September. This would be an increase from the 3.2% increase in July. It will most likely drop back in October and November, Sharif said. The chief economist at Comerica Bank predicts that the Federal Reserve will pause and not raise interest rates at its upcoming two-day meeting on September 19 and 20. However, Comerica expects the Fed to boost the short-term federal funds rate target by a quarter percentage point after the conclusion of another two-day meeting on November 1. According to the Comerica estimate, after a November rate hike, the Fed could reverse gears and begin reducing interest rates during the first 6 months of 2024. According to Bill Adams, chief economist at Comerica Bank, the Consumer Price Index is expected to be roughly 3.3% higher year-on-year in September. If that is the case, Adams estimates a CPIW of roughly 3%. Retirees who are drawing Social Security, as well as receiving a pension or tapping into 401k savings, are likely to grouse more about their 2023 tax returns. When it comes to Social Security benefits, the taxes are difficult, yet many seniors must review them. Individual filers may be required to pay income tax on up to 50% of their Social Security benefits if the total of their earnings falls between $25,000 and $34,000. Your combined income is calculated by adding your adjusted gross income, non-taxable interest, and half of your Social Security payments. If you file a joint return, you may be required to pay income tax on up to 50% of your Social Security benefits if your total income is between $32,000 and $44,000. According to the IRS guidelines, up to 85% of your Social Security benefits may be taxable in some situations if either of the following conditions apply. The sum of one-half of your benefits and all other income exceeds $34,000 if you file as an individual, or $44,000 if you are married and file jointly. You are married, filing separately, and resided with your spouse during the calendar year. Taxpayers can find information about Social Security benefits and federal income taxes in IRS Publication 915. According to April Walker, lead manager for tax practice and ethics at the American Institute of CPAs, the inflation-driven increase in Social Security benefits paid in 2023 would almost certainly increase the amount of total combined income used to calculate any taxes on Social Security benefits when people file federal income tax returns in 2024, all other things being equal. Because the tax thresholds are not adjusted for inflation, Walker explained, more seniors may have to pay taxes on a portion of their Social Security. In 1984, up to 50% of Social Security benefits became taxed. The second tier, under which up to 85% of Social Security benefits could be taxed, went into force in 1993. According to Johnson, the tax was initially presented as mainly affecting high-income seniors. Unlike income tax levels, income limits for paying Social Security payments were never changed for inflation, according to Johnson. As a result, she claims, an increasing percentage of older taxpayers may end up paying taxes on Social Security payments as their earnings rise and they pay tax on a higher portion of their benefits. Today, even seniors with modest middle-class salaries, according to Johnson, pay a tax on a portion of their benefits, which grows larger with COLA increases. However, Johnson cautioned that changing how Social Security benefits are taxed might spark a complicated argument because tax money is a key source of funding for the Social Security and Medicare trust funds. To be sure, someone earning $1,000 per month in Social Security retirement benefits now would only enjoy a $30 boost based on a 3% rise if they retired before their full retirement age or did not work for several years. Again, we don't know the specific COLA calculation, so the increase could be less than 3%. And, crucially for many Social Security users, those on Medicare will not know the final cost of a COLA increase until new Medicare Part B premiums are released later in 2023. That additional premium expense will eat into any COLA increase. In March, Medicare trustees predicted that the standard monthly Part B premium could rise by $10 to $174.80 for the normal monthly premium in 2024. A final figure could be announced in November or before. Johnson anticipates that an additional $5 could be added to premiums to pay major new administrative and monitoring costs related with a new Alzheimer's medicine, lecanemab, which has an exceptionally high price tag and is marketed under the brand name Leqembi. Without insurance, the medicine is projected to cost roughly $26,000 per year. A lot of information has been presented in this video. What do you think of the pros and cons of this information? Don't forget to like, share, subscribe and leave a comment below. Take care and remember that your money matters.